Good morning and welcome to your market analysis for August 17th, 2025. Last week, we witnessed a broad-based pullback across the major US indices as investors opted to take some profits off the table after a solid run. This consolidation was marked by increased investor caution and some early signs of sector rotation. Meanwhile, the market's fear gauge, the VIX, ticked higher, signaling a rise in uncertainty and hedging activity. Against this backdrop of general market consolidation was zoning in on Joby Aviation. This innovative air taxi company has experienced a sharp price correction recently, making it a fascinating case study of a high-growth narrative meeting technical weakness and regulatory realities. Well, break down the indices, check the volatility, and then dive deep into Joby's chart and the latest news impacting its future. Looking at the S&P 500, the benchmark index experienced a controlled decline, ending the week down about 0.8%. The price action shows a clear test of the 50-day moving average, a critical support level that bulls will want to see hold. Volume was lighter than in previous sessions, suggesting this may be a consolidation phase rather than the start of a major downturn. We saw particular weakness in the technology and consumer discretionary sectors as money flowed out of high-growth names. The overall picture is one of cautious consolidation. Turning to the Dow Jones Industrial Average, the story is quite similar. The index of 30 blue-chip stocks retreated, weighed down by its industrial and financial components. The chart is approaching a key psychological support level around 39,500 points. The market breadth was negative, with more decliners than advancers, indicating that the bearish sentiment was widespread among the Dow components. This underperformance of cyclical stocks suggests growing concerns about the near-term economic outlook. The Nasdaq Composite, which has been a market leader, felt the brunt of the profit-taking. The tech-heavy index pulled back sharply from its recent all-time highs, confirming that level as a formidable short-term resistance. Momentum indicators like the RSI and MACD are showing signs of rolling over, suggesting that the powerful uptrend is losing steam. While the long-term trend remains intact, this consolidation is a necessary and, for now, healthy development after a period of significant gains. As the equity markets pulled back, the CBOE Volatility Index, or VIX, predictably moved in the opposite direction. We saw the VIX spike by about 15%, climbing back above the 16 level. This indicates a tangible increase in investor anxiety and a growing demand for portfolio protection through options. While still not at a level of extreme fear, this rise in the VIX confirms the cautious, risk-off sentiment that characterized the end of last week's trading and is something we need to monitor closely.
Now let's dive into the technicals for Joby Aviation. The chart paints a clear picture of a trend reversal in the short term. After a spectacular run-up to nearly 20, the stock has undergone a sharp correction, closing at 16.63. We can see a decisive break below the middle Bollinger Band, which had been acting as support. This is a bearish signal. Reinforcing this, the MACD indicator has posted a bearish crossover, with the histogram turning negative, confirming downward momentum. The RSI has also fallen sharply from overbought territory and is now hovering around the 50 mark, indicating momentum has shifted from bullish to neutral bearish, while the stochastic oscillator is in deep oversold territory, which could signal a potential bounce. The overall weight of the evidence suggests further downside is possible. Key support to watch is the lower Bollinger Band around 15.56 and the prior consolidation zone near 15.00. Adding a fundamental layer to our technical analysis, a recent article from The Motley Fool asks the crucial question, where will Joby Aviation be in 5 years? The piece delves into the long-term investment thesis, balancing the enormous potential of the urban air mobility market against the very real and significant hurdles Joby faces. It highlights key milestones, including the complex FAA certification process, the challenge of scaling manufacturing, and the importance of its strategic partnerships with companies like Delta. However, it also underscores the substantial risks, high cash burn until revenue generation begins, potential regulatory delays, and an emerging competitive landscape. This news perfectly contextualizes the current stock volatility. Investors are grappling with this exact dichotomy, a potentially revolutionary future versus near-term execution risks. In a risk-off market, concerns about cash burn and timelines can outweigh long-term promise, contributing to the kind of pullback we're seeing on the charts. Therefore, the outlook remains cautiously neutral. The long-term story is compelling, but short-term volatility is likely to persist. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.